Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video.
Welcome back, everybody. So let's keep up with the analysis of the euro currency. Fed statement has been released. In general, it's very informative. If you have read some extraction maybe from the speech of Jerome Powell. So the major thing that actually I think that is most valuable in the statement that Jerome Powell provide the clarity. So he said a few things. So first of all, it's the target on inflation. And this year is about the 4.2%, that the two times greater than initially Fed has planned. Decreasing of the forecast of gross domestic product, and it's downgraded from the 7.2 to the 5.6, if I don't miss something. And what's more important, that he said that in general they see nice performance of the economy, and they would like to starting interest rate rising after they will close the tapering program. So they should close the bond buyback program, and only after that they intend to hike the rates. And it means that the $120,000 billion of the monthly purchasing, it should be closed within a year approximately. So in 2022, and then in 2023 they start rising rates. And finally, another very important moment is that he said that interest rate rising will take a bit faster speed than it was suggested initially. So Fed intends to accelerate the rate increasing, which is sounds more hawkish than it was on the previous statement. That's why in general, overall statement that we've got, we could treat as a bit more hawkish than it was suggested. And actually you could see it by the market reaction. As in European currencies, in the gold market, stocks in general have been raised just because Jerome Powell provides also the clarity that stock market will stand in an environment of the low interest rates at least for 1 year. That is really great news for investors, as they could just grab the dividend yield, no hurry with that the money, no worrying that the money will become more expensive and could maybe impact on the performance of the companies because of the interest rates possible increasing. So that's in general positive statement for stock market. Well, from the technical point of view, what we have, well, of course, we'll take a look, an in-depth view on the statement now, a weekly report as usual. But for a short-term picture, that definitely supports the United States dollar. Currently, and in general, as we discussed recently, currently we're take off the table the possible scenario with the butterfly. It's just because market stands right near the lows, and here is we have no significant support. No fib levels, no oversold. Market has formed recently bearish reversal candle, as you can see here. And it also suggests a direct downward continuation. So chances on the forming of the butterfly currently stands low. So actually I do not see, well, there should be some reasons for a deep retracement here on the euro currency, but currently I do not know what it could be. So more probable that market should stay inside of the range of this reversal candle and then reestablish downward action. That's the short-term performance. So at least this is the candle that you could stand with if you intend to take the short position on the intraday charts of on euro currency, and if the overall bearish short-term context is valid, market has to stay inside of this swing, inside of this candle. So it's not necessary to consider some high standing levels, trying to hide stop somewhere too far, because breaking of the and raising of the reversal candle automatically will mean that we will get the deep upward action. So the very short-term context will be erased. and this will be some kind of the invalidation point here for short-term performance. So on the long time frame, on the follow time frame chart, you could see market has dropped below the OP, and by the logic of the general ABCD progression, it should mean that we're going to the XOP. That's the reaction on the OP target. It's 2 times greater than to the COP. It's kind of the ABCD pattern has been formed that we considered recently. Now collapse has happened, so this should be reaction after the retracement, and then market should continue action to the XOP based on the overall shape of the price that we have here. If this will not happen and market somehow will take it out of this top, don't be short, be prepared for some more extended upward action or some other performance that we could get. But currently, guys, it's probably could be triggered only by some external factor again. So some news should be released, because based on the background that we have currently, overall fundamental background for euro currency, recent statement from the Fed, and general overall sentiment position on the euro, there's no reason to suggest that we should get some upward action here. Because we do not see currently, at least at this moment, we do not see any reasons for that. And that's why we could focus on just deeper downside continuation on euro currency, on the dollar index. So if you would like to follow to this overall setup that we have, you could focus on, as I said, most recent swing down. Here we have nice level to consider around 17.25 on average. It's confidence resistance. This will be harmonic swing destination point. And that actually the point that is suitable to consider for taking the short position if, as I said, overall performance here is still valid. So market is still going with this tendency. If it is still valid, market should not break this level and should not spend, and even more, it should not move above the previous top. So that's why if you decide to follow, you could consider taking the short position around this area and hide the stop above the 17.55. So very small stops around 30 pips. Recently also, as you can see, harmonic swings were kept by the market actually very accurately. It's clear ABCD with the 2 harmonic swings. And here's also was the 50% retracement. So now it could be repeated again. That's actually all that we have on euro currency by far. The major changes and major action should happen only when the market will hit major 1620 support area. That could be some really interesting stuff, and a lot of patterns might be formed there because it will be very strong support. Currently, we're still on the way to this level, and overall background stands friendly to the downward continuation.